Welcome to the deep dive. Today we're really getting into something pretty fundamental in trading. It's something that can honestly make or break your account. We're talking about position sizing, specifically how you can manage it using Exness Broker. Our mission really is to help you understand how to manage risk effectively and, avoid those catastrophic account losses.
Yeah, absolutely. And we've got a great source for this. It's a YouTube video transcript. It basically walks you through using a built-in tool right inside Exness for figuring out that perfect position size.
Okay.
Think of it as a practical guide,
Right.
really hands-on.
Right, okay. So risk management, we hear that term all the time, but let's unpack it a bit. What does proper position sizing, like the kind this video talks about, actually do for a trader? Why is it so critical?
Well, the key thing, and the video really hammers this home, is how it tackles potential loss head-on. By figuring out your trade size carefully before you even click buy or sell.
Beforehand, yeah.
Exactly. You're basically putting a hard limit on how much capital you could lose on that single trade. It lets you, match the potential downside to what you're actually comfortable with.
So like setting a personal budget for each trade.
Kind of, yeah. If you decide, okay, I only want to risk 1% of my account, position sizing is the tool, the mechanism that makes that happen. It's not just a vague idea.
Gotcha. So it's about setting those guardrails first. That makes a lot of sense, especially if you're trying to learn quickly but don't want to get wiped out by one bad trade going sideways. You want to avoid that awful feeling.
Definitely. Okay, so the video then shows how to find this tool within Exness. Where do we actually look?
Yeah, it's pretty straightforward, step by step. So you're in the Exness trading terminal, right?
Okay.
You look over to the right side. You'll see something called the regular form.
Regular form, right?
Click on that because you drop-down menu, and in there you'll spot the risk calculator form. Click that, and boom, you've got the calculator window open. Okay, few clicks. Sounds easy enough.
Yeah.
So now we've got this calculator window up. What are the bits and pieces we need to pay attention to? What options do we have?
Okay, so there are a few key things in that window. First, you choose between a market order that's executing right now at the current price.
Instant trade.
Yep. Or a pending order, which you set up to trigger later if the price hits your target level.
Okay.
Then, obviously, direction. Buy if you think it's going up, sell if you think it's heading down.
Makes sense.
And then the really crucial part, the risk settings. This is where you tell it how much risk you want to take. You can do it as a percentage of your account balance.
Like the 1% example.
Exactly. Or you can set it as a specific fixed amount of money.
A dollar amount.
Right. And finally, you've got places to punch in your stop loss and your take profit price levels.
Okay. And the video, it walks through an example, right? Using market and buy.
Yeah. It keeps it simple, selects market, chooses buy, and then zooms in on setting the risk.
Let's talk about that percentage option first. Setting risk based on your equity. How does that work in practice with the calculator?
So using a percentage is, it's a very common approach. Good practice, many would say. The video uses that $1,000 account example.
Right, the $1,000.
Yeah. And they want to risk 1%. So you select percentage of equity, type in 1%, and the calculator instantly shows you, okay, for this trade, 1% risk means potentially losing $10.
And that's based on the current account balance.
That's a key point the video makes, yes.
Yeah.
It's always based on your current equity. So if your account grows, that 1% represents a slightly larger dollar amount. If it shrinks, it's a smaller dollar amount. It scales with your account.
Ah, okay. So it adapts automatically. That's quite smart. Keeps the risk relative.
Exactly. It helps keep things proportional, which can be really important, especially if the market gets choppy.
Right. Now, what about the other way? If you just want to say, I'm willing to risk $10, period, the in-money option.
Yep. The in-money option is for that. You just type in the exact dollar figure. So using their example again, you just enter $10.
Simple as that.
Simple as that. The calculator then works backward to figure out the position size so that if your stop loss gets hit, you lose that $10, no more, no less. Well, assuming no major slippage, of course.
Right. Usual caveats. But it targets that fixed amount.
Exactly. And that can be handy if you have a very strict dollar limit per trade in mind. Maybe if you're testing something new and want to cap the cost of each test.
Okay, cool. So it covers both styles.
Yeah.
Now, you mentioned stop loss and take profit. Those are fundamental, right? You need to tell the calculator where those levels are. How do you input them?
Absolutely fundamental. Your stop loss is your safety net, the price where you automatically cut your losses if things go wrong.
Your exit point on the downside.
Precisely. And take profit is the opposite, the price where you lock in your gains if the trade goes your way.
Your upside target.
Right. So in the calculator, there are specific fields for these. You just type in the actual price levels. I want my stop loss at 1.2345 or whatever the price is.
Okay, based on the price chart.
Yeah, based on the price. The video mentions you can sometimes set them by pips. That's another way traders measure price movement.
Right, pips.
Yeah, points and percentage. But the example in the video just sticks to using the actual asset price, which is maybe more intuitive for many people.
Makes sense.
Yeah.
Okay, so you've told it your order type, direction, how much risk you'll take, percent or dollars, and where your stop loss is. Now, this is the magic part, isn't it? The calculator does something important.
This is the core function, really. This is what makes it so useful. It automatically calculates the correct load size.
Load size, you mean like lot size, position size.
Lot size, position size, load size, different terms for the same thing. How much of the asset you're actually trading, based on your risk setting and your stop loss distance.
The distance between entry and stop loss.
Correct. The calculator crunches the numbers instantly and tells you the precise lot size to use. The video example shows, I think it calculates 0.02 lots after they put in their 1% risk and their stop price.
Okay, 0.02 lots. And what does that mean for the trader? Why is getting that number automatically so good?
Well, think about it. Manually calculating lot sizes involves knowing the pip value for the specific asset, your account currency, the distance to your stop loss. It can get fiddly, and it's easy to make a mistake, especially when you're trying to trade quickly.
Yeah, I can see that. Pressure's on.
Right. This tool just does it for you. And the critical thing is it ensures that if the price does hit your stop loss,
your loss is limited to what you planned.
Exactly. The loss you actually take should match the risk you defined up front, that 1%, or that $10 in the examples. It removes the calculation error and forces you to stick to your risk plan.
Ah, okay. So it enforces the discipline, almost. Takes away the complex math and potential fumbles.
Pretty much, yeah. It's about consistency and accuracy in applying your risk rules.
Okay, that's powerful. So if we boil it down, the big takeaway from using the Exness risk calculator is?
I'd say the core benefit is empowerment. It empowers you, the trader, to actively, consciously manage your risk on every single trade you take. It simplifies defining risk, inputting your plan, and then it does the crucial calculation for you. It's a massive help for effective risk management.
And ultimately protecting your capital, right?
That's the name of the game, keeping your capital safe so you can stay in the market.
Okay, so just to run through it again quickly for you listening, you open Exness, find the regular form on the right, pick risk calculator form, choose market or pending, buy or sell, set your risk percentage or fixed amount, put in your stop loss price, maybe your take profit too, and bam, the calculator tells you the load size. Seems pretty clear, right?
It's a defined process.
And it's all built around protecting your money. Now, just think for a second. Imagine using a tool like this consistently, every trade. How could that change your approach to risk? How could it affect the health of your trading account long term?
Well, it forces that discipline we mentioned. It makes risk a conscious choice every time, not an afterthought. You have to decide on your stop and your risk before you can even see the lot size.
Right. It front loads the risk decision.
Exactly. It stops you from, getting excited about a potential profit and just whacking on a massive position size based on hope rather than calculated risk. I think we've all been tempted to do that, especially early on.
Oh, for sure. So it builds better habits.
Definitely. Foundational habits.
Okay. And maybe one last thing to chew on then. While this calculator is great for the mechanics, how might digging deeper into why position sizing works, the principles behind it, how might that understanding, beyond just using the tool, level up your trading strategy even further, make your account even more resilient?
That's a great point. Understanding the why, things like risk-reward ratios, correlation, how position size interacts with overall portfolio risk, that adds another layer entirely. The calculator is the how, but the why informs your entire strategy.
Food for thought, definitely. There's always more to learn. And just a note, if you are using Exness, the video we base this on, it apparently has a link in its description if you want to see the tool in action directly.
Worth checking out if you use the platform.
Absolutely. Well, thanks for joining us for this deep dive today.
My pleasure.